Hi everyone, thanks for joining me. I'm Ivan Illan, the founder and chief investment officer at AWAIM, and today we're going to talk about something that I don't know why, but people should obsess a little bit more over this particular economic metric, and it is a picture of it right behind me, and this is from our research highlight that we published in early part of this month, July 1st, 2025, and it shows, and you can kind of make out a little bit of it, but I'll put a link below in the description for you to link to it. M2 money supply, money stock in the US economy, and then also the velocity of M2 money stock. And these are two separate metrics, but are very helpful in actually giving us some indication of the health and really the vigor of the US economy. And of course, taken together, the more metrics you look at and evaluate and compare with one another, especially over time, over decades, you start to notice some things. And certainly we're noticing something particularly interesting. And so the chart behind me, which you won't be able to make out, and especially with the sun today here in Los Angeles being so wonderfully bright, there's a couple of things. The shaded area shows the actual money velocity of M2 money stock, and then the purple line shows the simple money stock or M2 money supply. And what's so interesting about this is if you look back several years through today, that money supply has actually gone past to where it had been prior to the pandemic, and you see that kind of signified here, this really high watermark. Well, here it is today. It's even higher than it was after all that money was thrown at the U.S. economy in response to the pandemic. And what's so fascinating is that velocity of money, the rate at which money actually circulates through the economy, is well below where it had been several years prior. This is going back a decade. And so there's been this structural change, apparently, with the velocity of money. And one of the thoughts of this is post-pandemic, there had been more, I would say, or characterize it as fear. And so many households, many companies started to hoard money, hoarding money in savings in particular, especially in the banking system. And then also retirees, or those that were a few years away from retirement, ended up investing more. So people were having more cash. There was more cash available, but they were investing that money in the stock market, mutual funds, exchange traded funds, various types of investments, real estate. And in fact, those can be structural changes to an economy and absolutely could support a reduction in the velocity of money. Again, the velocity of money measurement says how quickly is one US dollar moving through an economy. How fast is that dollar changing hands? And throughout history, this metric has been very helpful to gauge the health and like I mentioned, the vigor of an economy. And since really 2008, since the great financial crisis, this has really been on a consistent decline. And so the question becomes, how can you have a growing economy that has significant breadth of benefit for the constituents of that economy when money isn't changing hands as quickly or as frequently as it once had. And that's a very fundamental question. Just because money supply keeps going up and up and up and up and up doesn't mean that the economy is actually doing better. Money supply really doesn't indicate anything specific about the health of the economy. It just says that there's more money in the economy. And certainly those that have money have more money, and they've invested it or they've saved it, and it's compounded that growth. So now there's more. But that is not ubiquitous across the entire constituency of the US economy. And that's why money velocity matters so much. That's why being understanding of what this is, and that it has been on this slow, steady, consistent decline for many, many years, and it hasn't rebounded anywhere near as much as overall money supply, that says something. It means something. And it cannot continue this way forever. There has to be something that has to be a catalyst that reverses this course. And that catalyst could be many different things, but ultimately it would translate to some kind of disruption in the US economy, whether from a production side or other type of disruption within the US economy. A great recession, significant layoffs, significant contraction in consumption. All of that would ultimately translate into risk pricing. And that's the other thing that this research highlight shows. It shows something very interesting about looking at the price of risk assets, and specifically it looks at the S&P 500. It also happens to look at Bitcoin. It's from an investment bank in Switzerland that I cite their research here. And it is very interesting to see that with increases in money supply, there is an automatic, lagged, but automatic increase in risk asset pricing. And the correlation is nearly perfect. And we've known this. We know this to be a truth. And unfortunately, that isn't very well understood, which is when you have a lot of money floating around in the economy, and there's just a tremendous amount of it, and if that money isn't being spent, but it's being saved and invested, then that's just forcing all this money like a plow with snow. It's got nowhere else to go. It's not being consumed through transactions. It's being plowed into risk assets like the stock market, as well as other assets that may be more exotic. And that includes things like private credit or private equity, where some have argued that the valuations seen are highly unjustifiable. Just like there are many naysayers around Bitcoin, that the valuation is highly unjustifiable. It is a good question. Are the assets that are priced in the market today, are these priced as if we're in a more normalized money supply environment? Or are they just priced the way they are priced because there's just so much money floating around? This is a really fundamental question. It's the kind of things that we think about often here at our firm, and certainly the discussions that I lead on our investment committee meetings. And feel free to ask any follow-up questions that you may have by emailing us at info@alignwealthllc.com. Of course, our clients benefit from our work on a day-to-day basis, which we're so very happy to serve our investors and our clients, and look forward to speaking with you if you'd like to have a conversation. Thank you so much for joining me on this discussion on money supply and money velocity, and please check out our research highlight for more information, more details. Dive deeper into this very, very interesting topic. Thanks so much. Take care.